Hello everyone, thanks for joining us today and welcome to this presentation of winning trading techniques of top stock traders. Now this promises to be a great presentation. I have a lot of great information to reveal to you today, but I'd like to start off the presentation by giving you a few statistics and some actual facts. Now first of all, the first fact is 80% of all traders lose money. And when I say lose money, I don't mean that you'll go into some type of small loss or drawdown. It basically means that 80% of all traders will ultimately fail, meaning give away all of their capital. Now this leaves 15% of all traders just to break even, which is not that bad in tough market conditions, but after all your hard work and everything you've been studying and trying to research, you're just basically going to be treading water. Lastly, this means that only 5% of all traders are consistently profitable. Now if you want to see what that looks like on a pie chart, as we see here, that large portion in red, that signifies all of the traders that will ultimately fail. That slightly smaller sliver there in blue will tell about the traders that will ultimately break even, and that very, very slim slice there in green represents the amount of traders that will ultimately be consistently profitable. Now you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Well, believe it or not, these traders have an edge. They have a certain secret that they're doing or not doing. And these are the things I was taught on the floor myself, okay? And now today I'm going to actually reveal some of these winning secrets that traders have, and you'll be able to implement them so that you can actually find signals such as this. This happened just about 3 weeks ago in SHW. As we see here, with just the limited information that's given, just about not even 2 weeks of trading time, you see here that the information I'll be giving to you generated a buy signal, and you could have taken advantage of the nice 25-point gain in the next 2 weeks. So, once again, welcome to today's presentation. My name is Steven Primo. I am the president and founder of Specialist Trading, and we are first and foremost an educational company. As you'll see today, I'm all about educating you so that you can ultimately make your own trading decisions. I've been trading for nearly 40 years now. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, specialists, if you're not familiar with what a specialist did or what they used to do, because there aren't a lot around anymore, only the ones in New York, if you ever Google those pictures of the people on the trading floor where they're screaming and yelling and making these weird hand signals, the specialists were those gentlemen behind those large wooden podiums that made markets in roughly 50 stocks. So if you wanted to purchase or sell a particular issue or equity, you had to go to the trader who specialized, who made the market in that particular equity. And that's what I did for roughly 9 years. I traded as a specialist on the floor during the crash of 1987. I traded through the bull market that followed. So I've been involved in every market environment imaginable, from straight up to straight down markets, sideways markets, quiet markets, volatile markets. And I traded just about every system and strategy and technique that you can think of. Now, out of all my experience, I know after nearly 40 years what works in terms of consistency and what doesn't. So all I do at Specialist Trading is teach and mentor our members all the things that I currently use myself and that have shown to have a certain level of consistency throughout all the years. I'm going to show you 3 great techniques. These are actually 3 of the rules to one of our best strategies, which I just shared with you a few moments ago. And I'll actually give you those rules of this particular strategy. But before we begin, as always, we are required to show you our disclaimer. So please take a moment to view this. I'm going to show you a lot of performance results with all the different techniques today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this. So as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter if you haven't done so already. I post things on a daily basis, anywhere from daily financial wisdom, different tidbits and pieces of wisdom here and there, to actual signals that our strategies have generated, anywhere in the Forex markets, the futures markets, as well as stocks. In fact, I'll be speaking about a great signal that was just posted about 3 or 4 days ago as well. Now, I realize that Twitter is rather limited, so if you'd like to get more information about myself and about what we do, my sister site, which is Pro Trader Strategies, has put together a Facebook page. Simply go to Facebook, log on with Pro Trader Strategies, and there's a lot more information, videos, different pieces of work that we've done and shown there, a lot more detail about what we do and how to learn and become a member and student of mine. Now, also one other thing I'd like to mention, I have a ton of information to present to you today because it's all leading into something that I'm very excited about, and that is our new stock college. So if you happen to have any questions, kindly wait till the very end of the presentation, okay? I'm going to show you a lot of information, and many times your question will be answered on the very next slide. So if you have a question, wait till the end of today's class. The one question I will answer is this being recorded? Yes, it is. So if you have to leave early, if you're having technical difficulties, we will send you a link to this presentation. Just go to Pro Trader Strategies and request a link, and we shall send it to you. All right, so thank you very much for leaving the questions till the end. Let's begin. Now, I want to start off by talking about what I learned trading on the floor of the exchange, because I've made no secret about this. I struggled my first year or two on the trading floor. I was doing everything I've been taught, all the conventional wisdom that's supposed to work, but nothing seemed to work. And I'm sure a lot of you are going through that yourselves. In other words, I did the same thing as everyone else, looked at support and resistance, Fibonacci, tons of indicators, looked at all the news. I just wasn't making any headway. I was basically treading water. And my mentors, who were actual specialists themselves, who've been trading around 40 years each, saw how discouraged I was, and they taught me so many things, these winning secrets of these top stock traders that were able to turn my trading around. And I believe these are the things that have actually sustained me for nearly 40 years in trading. So let's start off by sharing with you just 3 of these secrets of top stock traders. The first one is winning secret number 1, and it's basically winning traders do not concern themselves with news. I know a lot of you are saying, well, how can this be? I always look at the news. I've been taught you have to look at the news. I know exactly how you feel. So was I, all right? But let me just share with you something that happened this past week. Now, we all know yesterday stocks rallied and they ended higher as the Fed said they're standing pat on interest rates. As you can see here, USA Today reported, this was after yesterday's close, that stocks rallied after the Federal Reserve left interest rates unchanged and signaled more gradual increases. The Dow Jones Industrial Average finished up about 75 points or 0.4%. And so this was a nice little tidbit of news that people were waiting for. If you were watching the first half of the day, the market was just basically silent, waiting for something to happen on the Fed. And this was a nice spike to get them going. So if we look at the chart here of the S&P 500 index, which is a much broader index, you'll see that coming into yesterday's action, it actually looked as if we were rolling over, that we had made some type of a top, and we were going to be going lower. A lot of people were betting on a market falling out of bed. But once that news came out, well, as you can see, the market rallied stronger, and it's rallying into today, a little bit more left over from yesterday's upward action, okay? So someone looking at this would say, well, Steve, see, this is how the news works, okay? This is why you want to always be involved in the news when the Fed comes out with something, with interest rates, about jobless claims, or when a stock reports its earnings, anything going on globally or economically. It's always good to know that in advance, or don't make a decision until that comes out. Once again, this is the way I was taught myself. Let me show you how it really doesn't matter, because from the secrets I learned on the floor and what I teach in my courses, we had multiple buy signals generated actually about 3 to 4 days prior to the news coming out with the Fed. As you see here, I even tweeted about it on the 24th. Now, even though it says for E-mini traders, you see at the very bottom, we were generating buy signals in the E-mini S&P as well as most of the major market indices. So this was basically saying the market is telling us that we're going to have a nice rally here. Now, it wasn't as if the Fed called me up and said, hey, Steve, this is the chairman of the Fed. I'm going to make a nice news announcement for the market. So why don't you tweet out that we're going to have a nice rally, that we're having buy indices that are signaling buy signals, okay? No one let us know. We get all of our information from the market itself. So as you can see here, we were roughly a day or two prior to the news event coming out. Okay, so as you can see, top traders, top stock traders don't concern themselves with news. There's no reason to do that. There's no reason to overcomplicate your trading. Here's another winning secret. Winning traders don't pick tops and bottoms. I know you're going to say this is ridiculous. You're always taught that when a market is overbought, you want to sell. When a market is oversold, you want to buy. I know I was taught the same thing. But let me show you why winning traders never pick tops and bottoms in terms of their trading. Here's an older chart of Caterpillar tractor, okay? Now, the conventional wisdom tells us that when you're trading overbought, oversold markets, you want to use some type of oscillator or overbought, oversold indicator to tell you when to get in, when to get out, and vice versa. Now, if we look here at the very bottom, we have a stochastic indicator plotted, just a standard slow stochastic. And the conventional wisdom tells us that when we get into the so-called oversold area, as you see here circled in green, that's a buy setup. And lo and behold, Cat tractor went up for the next week. You have a nice little profit there, okay? Now, conversely, as you see the indicator ascended and then went into the so-called overbought area. So you want to sell, right? You exit your long position, you go short, and works like magic, right? Now, this is the allure of trading tops and bottoms because, they're like the slot machines. They give you this false sense of security thinking that they work very well. But at this point, you've got a couple of good trades under your belt. You feel very confident. And guess what? The indicator now goes into the oversold area, so you decide to buy. But this time, it doesn't go up. That's okay. You buy some more, and you buy some more until ultimately you give everything back. See, there's no consistency in trading tops and bottoms. This is what my mentors taught me because I used to just totally trade tops and bottoms on the floor, and it would work until it didn't. And then just like this example, I would give everything I made back. All right, look at your own trading. If you like to trade tops and bottoms, when someone tells you a market is overbought, oversold, how well is that working for you in the long run? Sure, you may have had one or two good trades, but in the long run, be honest with yourself. Are you making money trading this way? And then lastly, winning secret number 3. Winning traders never listen to trading gurus. All right, it's extremely important. What this is basically saying is, don't listen to some guy on TV. Don't listen to someone even in a webinar such as myself, and don't even listen to people talk about in trading rooms or chat rooms, because this is just someone telling you what they think is going to happen in the stock or in the market, and basically there's no consistency in this either. Many of these traders don't have any idea, and they're actually losing money or not taking these trades themselves, and it's the blind following the blind. Now, there's a common denominator with all these secrets that were very tough for me to absorb, but once I did, I started to get onto that road to consistency. Now, all of these techniques are designed to take you out of the game of trading. Very important, very important. See, most of us don't realize this. We're kind of blind to this, but if you look at it, if you rely and make all your decisions based off news, you're basically saying, I don't know what's going to happen. I have to wait for a news event to tell me whether to buy or whether to sell. Okay? The same thing with an overabundance of indicators, whether you're trading tops and bottoms or just relying on indicators, because you're doing the same thing, saying, I can't buy or sell until these indicators tell me what to do. Or lastly, going to a chat room or a trading room. I can't make a decision because I have to listen to what these guys are saying. I have to mimic and piggyback off of what these signals are in the chat room. So they're all designed to take you out of the game. And this, in our opinion, is why 80% of all traders fail. Because you're basically relying on someone or something else to tell you what to do. They're telling you what market to trade, what the best time frame is, where to buy, where to sell. So what my mentors taught me is they said, Steve, the only way to become consistent in the markets is by becoming a part of the process. In other words, you study things that have stood the test of time, techniques that show a level of consistency, but you make your own decisions. You don't rely on something outside of you, such as an indicator, such as the news, or such as a trading guru in a trading room to tell you what to do. That's why at Specialist Trading, I started out the presentation by saying we're just an educational company. Even though we provide our students and members with signals and with strategies that are generating these signals, we're more about teaching you these so that you can ultimately make your own trading decisions. You can decide whether you want to take it or not. If there's too much risk, I'm not going to take it. See, we don't believe in systems because a system takes you out of the game. You have to blindly enter and exit the same way every time, each and every time, regardless of the market, regardless of the environment. You have to do the same thing. You've taken yourself out of the game. A strategy allows you to be a part of the process. It allots roughly about 25 to 30% discretion or input on your take so that you can decide, well, I'm going to take this trade, but I'm going to trade it a little conservatively this time, or maybe I'm going to trade a little aggressively this time. So we provide you with all that information so that you can make your own trading decision. Now, someone say, well, how do you provide us with this? How, is this some type of a course? Is this some type of a program? Well, here's what I'm really excited about, because we offer this only about once every couple of years. This is our Elite Stock College. We're going to start and begin this in roughly about 2 weeks. You've heard me speak about this before, but what we offer in the Stock College are many of these top techniques that these top stock traders use that I was taught on the floor. The first week, we're going to talk about the foundation and building blocks of stock trading. Probably really open your eyes up to things you never realized about how to trade stocks consistently. And then in the next few weeks, we'll talk about 2 of my favorite stock strategies. You're going to get the complete rules, where to place your orders, and on a variety of different levels. It's not a system. You're going to decide how you want to trade these, and we work with you on this as well. And then we'll go on to one of my most popular techniques, which is the PET-D. It's a roadmap or a directional tool. It tells you which direction you should be trading. It's a proprietary algorithm. Then we'll have one class entirely devoted to option trading. We know we have a lot of students that love our strategies, that love our techniques, but they say, Steve, I just want to trade options with them though. So we're going to have an entire class telling you and instructing you how you can apply options to these same setups. And then in the last class, we're going to talk about advanced trade management. This is a great technique I was taught on the floor some 30, 40 years ago about managing your trades that I don't believe anyone else is using. And then we're going to put it all together. I think the best thing about the Elite Stock College is that you also get lifetime correspondence with myself. So at any time during your trading career, I don't care if it's 5 months from now or 5 years or 10 years from now, you can always contact me and we'll have correspondence about any questions you may have. Now, what I want to do today is go over 3 of the rules of one of our best strategies, strategy number 4. And this is one of the strategies that's going to be in the actual course, okay? Now, unfortunately, I can't give you all of the rules. That wouldn't be fair to the people that have spent good money for this particular strategy. But I'm going to share with you the basic format for entering within this strategy, okay? And you can just kind of decide on your own where you want to get out, where you want to place your stop. You can start trading this as early as today once this presentation concludes. But I'm going to start off by sharing with you some of the highlights of this particular strategy. It's basically for all traders, from beginners to advanced. So it does not matter if you've been trading 2 weeks or 20 years. Everyone gets the same basic format when they begin. We have hedge fund traders trading this strategy. We also have people that have just started trading last week, okay, never traded before. So there's no need to worry about your level of expertise. It's extremely simple. It's designed to trade quick momentum moves. Now, when I was first taught this strategy on the floor some 35 years ago, it was designed to get in and out rather quickly because we were traders on the floor where we would basically buy something and sell it 5 minutes later. But in the course, once again, we teach you how to structure it to fit your needs. So if you like to be in the trade for a couple of weeks, that's fine. If you like to be in it for a couple of minutes, that's fine. We teach you all of this. Now, its intensity level from 1 to 3, if 1 is the most intensive strategies and 3 is the most relaxed, it's right in the middle at a very moderate level number 2. Now, it only uses 1 indicator. Remember, I talked about keeping things as simple as possible. It's a pattern recognition strategy, so we're just basically looking for a specific pattern. We only use 1 indicator in this. The beauty of strategy 4 is it works in any time frame, in any direction, and included to this, it works in any market. So if you like to trade other markets as well, ETFs, commodities, currency pairs, you can apply the same rules to them as well, okay? Now, once you become a member of the course, you also get a buy and sell indicator. So this is automatically on your screen. It will tell you when a setup has been generated. But remember, this is for educational purposes only, so that you can basically check your work to see if you saw the signal and a arrow or a downward arrow was generated. Now, as always, with all of our strategies or techniques, we ask you to learn this first, to paper trade. So even if you get these 3 rules today and you say, boy, this is easy, I can actually start trading this and apply my stop and my exit on my own, please paper trade this first. Don't jump in with both feet first. You need to really practice this a little bit by paper trading so you can understand. Our edge here at Specialist Trading is consistency, okay? I'm not going to sit here and tell you that every trade will work. Now, in fact, I'm actually going to show you a few examples where it doesn't work. But the beauty is that even when you have a small loss from time to time, the strategy is so consistent, it will bounce back and recoup those losses rather quickly, sometimes on the very next trade. So we're more about teaching you how to trade a method that is 2 steps forward, 1 step back, as opposed to what most other websites do, and they promise you the world saying you're going to accumulate thousands and thousands of % in your first year. We don't believe in that because everyone comes bringing something different to the table. So it's really up to you how well you can trade this, okay? All right, so let's start out by sharing what the indicators are. It's just a 50-period simple moving average. That's it. So whenever you're going to be trading this, you always need to have a 50-period simple moving average applied to your chart. Now, someone could say, well, Steve, I only intraday trade. That's fine. Have a 50-period moving average of the last 50 5-minute bars or 10-minute bars, whatever you're looking at, okay? Others will say, well, Steve, I only look at weekly bars. It's fine. Have a 50-period moving average of the last 50 weeks. That's all you're required to do. You do not need to look at a higher time frame. There's no consistency in that. That's another winning secret. There's no consistency in looking at different time frames. It absolutely doesn't make any sense to do that. We've found no consistency in nearly 40 years. So just look at the chart you're looking at, okay, and have a 50-period moving average applied. Now, these are the rules. Now, don't worry if you don't copy these down right away. I'm going to go over them step by step as well. Once again, this is being recorded, so if you didn't get all of these rules, you can request a link to this, and you can watch this at your own leisure. But first of all, these are the rules for buys. Just simply reverse them if you'd like to go short. All right, remember, it works in all time frames, and just reverse for sells. Rule number 1, the closing price must be above the 50-period moving average. Now, in an ideal world, you'd love to see all the bars above the 50-period moving average, but from time to time, you will see a few of the bars below the 50. As long as we close above the 50 and your entry really is above the 50, that's perfectly admissible. Now, what we're going to do is we're going to look to buy when a price bar closes in the top 25% of its range. We're going to call this our setup bar. I know a lot of people have trouble with this. They don't understand what that means, the top 25% of the range. Take any bar. It doesn't matter if it's a candlestick bar. It doesn't matter if it's an open, high, low, close bar. But just simply divide it by 4 separate but equal parts. That top quarter is where you want to see the price close, anywhere in that top quarter. All right. If we have a bar closed in the top quarter, that's going to be our setup bar. Now, it also has to meet the requirements of the pattern. But as I said, I can't go into that right now. That wouldn't be fair to the people that have spent really good money for this strategy, and then I gave away everything for free. But I'm giving you 3 of the 5 rules in the strategy right now. So once we have this setup bar in place, we're going to enter to buy when price trades 1 tick above this setup bar. Okay, so if the high of that bar is 50, we want to see it trade at 50.01 or 50.02. That's your trigger to buy at the market, or have a stop. Well, there's not any stops you can do now, but just buy at the market, or simply place a limit in there if you'd like once we trade there. Now, here's the one caveat. Since this is based off of momentum, we have to do this on the next bar. We don't want to sit around 5, 10, 20 bars and wait for it to trade above that bar. We have to have it happen on the next bar because we want to catch momentum. All right, let me show you what I mean. Let's show you some examples, and we'll go by step of how this works, okay? In fact, let's take that example I shared with you. Step number 1, price must close above the 50-period moving average. So let's show that first example in SHW we talked about earlier today at the beginning of the presentation. Okay. Now it looks like the stock, we're just looking at basically a week and a half here. Someone would say, well, Steve, there's no trend, so why would you be interested in this stock? Well, where is price in relation to the 50-period moving average? Price is above. So yes, the overall trend is telling us it's going up. So that means we can look for buy setups. We don't need to look at the weekly time frame to tell us what the daily trend is. We don't need to have tons of indicators telling us what the trend is. We don't need to look for higher highs, lower lows. Just look, where is price in relation to the 50-period moving average? As we see here, the majority of price bars have closed above the 50, so the overall trend is up. If the overall trend is up, we're going to be buyers. See how simple trading is? It's very, very easy. It's just we try to make it more complicated than it needs to be. All right, that was step number 1. step number 2. Now we're going to look to buy when a price bar closes in the top 25% of its range. This is our setup bar. So as we look here, we have this bar closing in the top 25% of its range, but it did not meet the remaining requirements of the strategy, which I'm sorry I can't divulge. But as we look here, we see this bar actually closed in the top 25%. As you see right there, here's the top quarter, and we close near the highs. So this meets all the requirements. As well, we close in the top 25%. So this is our setup bar, okay? This is our setup bar. Can we just simply buy at the market? No, and the basic format of the strategy says that we have to go to our entry method, which means we're going to buy when price trades one tick above this setup bar. But remember, it has to trade on the next bar. So if we're looking at daily bars, it has to trade there on the next day. If we're looking at 5-minute bars, it has to trade there on the next 5-minute bar, and so on. Now, if you notice, I say it just has to trade there. It does not have to close there. So many times you'll see it trade there and then close lower. I always get this email from my students saying, but Steve, okay, I got the signal and I entered, but it closed lower. So does that mean the trade's no good? No, we're not concerned with the close. We just want to see that we traded above there. So as we look where that green dotted line is, that's where we want to buy, but it must be on the next bar. As we see, yes, we did. We traded there and we closed higher. So we're actually long the stock, and that's how we gained 25 points in 2 weeks. Now we realize this is an expensive stock, $200, $300 stock, but you could have easily purchased directional calls or some type of option strategy. So it doesn't mean that you have to purchase the stock with these stock strategies. You can actually purchase options, and we're going to cover this in one of our classes within the Elite Stock College course. All right, so that is the basic, 3 winning secrets that I share with you. Let's look at how they make up one of our best strategies, which we are going to be teaching in the college. That's strategy number 4. I've just given you 3 of the rules, of the 5 rules, and let's just show you how simple it is to find these setups and how well they work without the aid of looking at news, without the aid of being in some type of chat room or trading room, and without the aid of trying to pick tops and bottoms. We're only actually looking at one indicator, and that's the 50-period moving average. Okay? Trading is really simple. It's just us that overcomplicate it, because for some reason we've all been taught that the more complicated your trading plan is, the more valid it will be. The more we look at support and resistance, the more we look at volume, the more we focus on what the institutions are doing, we think that that's going to mean we're going to be better traders. In my nearly 40 years of trading, I found it's the opposite. The more things you focus on, the more things you pile onto your trading plate, actually you're lessening your chances of becoming successful or consistent. So keep things simple as possible, and you'll get on that road to consistency. Let me show you what I mean in some of these recent examples. Okay, DUK, as we can see, someone looking at this right off the bat would say, well, Steve, you don't want to buy this because we're heading lower, we're in a downtrend. Ask yourself, where are the majority of price bars closing? They're closing above the 50-period moving average. So even though price is selling off, the overall trend is still up. Now, we're not trying to pick a bottom, we're just in sync with the overall trend. The overall trend is up. So we're only going to be looking at DUK from a buy perspective, from a buying bias. Now, as we see here, we have a bar that closes in the top 25% of its range. Sure, we had some other ones that closed in the top quarter of their range, but they did not meet the requirements that we can't divulge right now, but these are the other requirements of the strategy, of the pattern. But this one did. So this is a valid setup bar, and our software generated a buy signal. This was on the 2nd, just about 3 weeks ago, the 2nd of March. So we generated a buy signal in the stock. But remember, we can't just simply buy at the market. We have to wait for price to trade 1 or 2 ticks above, and it has to happen on the next day, the 3rd. So as we see here, on the 3rd, we traded there and we closed above. So we're now long the stock, and look what happened. Stock gained 6 points in 2 weeks. All right, all done without the benefit of any news or tons of indicators or asking what some guy is talking about in a chat room. We don't care about those things. Don't listen, or don't cloud your trading mind with noise. There's no way those things are going to help you. They're not going to make you any more successful. Just listen to one thing, the market in front of you. All right, how about VRTX? Someone looking at this would say, well, Steve, we want to buy this, right? It's going up. The last couple of weeks it's been going up. Well, not really. What's the first thing we do? We add the 50-period moving average. Now we ask ourselves, where is price in relation to that? It's below. So are we going to be buying if the overall trend is down? Absolutely not. The only thing we do if we are below the 50-period moving average is sell, or we look for sell setups. We're not going to just sell at the market. We have to look for sell setups. We're not going to buy at all, okay, until we have consistent closes above the 50. So since we're below the 50, we find this bar here that closes in its bottom 25%, and it meets all the requirements of the strategy. So this is our setup bar, and the software generated a sell signal on the 3rd. Okay, while the other stock was going straight up, this stock generated a sell signal. So we don't care what other stocks are doing. We don't care what the broad index is doing. Just look at the chart in front of you. So while DUK was going straight up and we had a buy signal, you could have also been shorting VRTX. But we can't short until it trades 1 or 2 ticks below. So let's see what happened on the 4th. We traded there and closed just slightly below. So now we're short the stock, and while DUK was going straight up, VRTX fell 13 points in 2 weeks. Okay? Trade the stock in front of you. Obviously, there was some bad momentum, a lot of sellers here. Where did we get our information? From the market in front of us. That's it. How about UPS? Well, this is going back just before March. Once again, where is price in relation to the 50 period? Price is above. So are we going to sell UPS? Absolutely not. The only thing we're looking for is a buying bias. And here we found it. Here's our setup bar. We closed in the top 25%. We met all of the rules and requirements of the strategy. So the software generated a buy signal just about a month ago to go long, but we can't go long until we trade above it, where that little green dotted line is. And so we see here that we traded above it the next day. Took a little while for it to get going, but UPS gained 8 points in the next month coming into this last week. Now, as we can see, a lot of people say, boy, Steve, some of these are great signals, but what if you happen to miss them? What if you're looking at something else, or if you're out of the office one day and you can't do it? The beauty of Strategy 4 is that it is constantly generating signals, either in different markets or in the same market. So if you happen to miss that, many times you get a second chance to get in as well. Okay? As you see here, another signal was generated just about a couple of weeks later. All right, so let's look at this now. This is WYN. This was just a few weeks ago. It generated a buy signal on the 11th. As you can see, we are well above the 50-period moving average. So someone looking at this would say, well, Steve, we kind of topped out. We're making a double top here. I don't like the market. It looks like it's topping out. I'm going to sell everything. Do you see how these things cloud your mind and raise doubt about your trading or your strategy? Because they're all just opinions. They're all just outside noise giving you feedback about what to do. Let go of all that and just look at the chart. Where is price? Price is above the 50, so we should be looking for buy setups. Now on the 11th, all the rules of strategy number 4 were met, all the requirements, so we can go long if we trade above it, and we did. And in 5 days, we made 5 points. Okay, that's simple coming into this past week. Now that's an example of taking a quick trade in this. Now obviously if you wanted to go in for a longer period, you could, and we teach you how to do that. Here's another example here in VRX. Obviously we're below the 50-period moving average, so there's no way we would be looking to purchase this stock. Absolutely no way. This is coming into March. All right, the only thing we're looking to do is to sell. Is it because we know of any news event? Do we know anything about the earnings of the company or the standing of the company or any? No, we have have no idea what it is. Okay, we're just looking at the chart, and the chart says it's below its 50, so you should be a seller. Now we need to add some structure to that, and that comes in the form of strategy 4. We need a bar that closes in its bottom 25%, which is right here. It met all the rules which we teach you in the course. So the software generated a sell signal just about a month ago on the 26th, all right? But we still can't sell until we trade below it. Now the next day, we gapped below it, but you still would have had a nice profit in the next couple of weeks, and you could have easily exited with a 10 or 15 point gain if you wanted to be in and out rather quickly. But once again, we teach you how to stay in these techniques and strategies longer if you'd like to trade it differently. And if you held out, you could have actually gained 50 points in a total of 3 weeks. Obviously, once again, as you see the gap that happened there on the 15th to the downside, some news came out, obviously bad news or some announcement or something involved with the stock to make it gap down and then close even lower. Did we know about that? Did the company call me up and say, Steve, tell your members to go short this stock? Some bad news is coming out next month. No. All the information, we took all our clue from the stock in front of us. These are the winning secrets of top stock traders. This is what I was taught on the floor, and this is what has been able to sustain me for nearly 40 years. Now I want to show you this just to show you the resiliency of trading and also how you can apply it to different markets. Now this is strategy number 4 as applied to IWM. That's the ETF for the Russell 2000 index, okay? And I'm also showing you this. This is going back about 3 or 4 months in December, because a lot of people were really concerned about what the market did the very first month of 2016. But we weren't concerned. Why? Because we're watching the ETF here of one of these major market indices. And where is price in relation to the 50-period moving average? Price is below. So this was telling us the market's overall trend is down. So we weren't looking to buy anything. This entire time we were looking to be sellers. Now, there were 2 signals generated. One was generated on the 17th of December, which turned out to be a loser, okay? You actually would have, had 1 day of a profit, but then the stock retraced or the ETF retraced, and you most likely would have been stopped out with a small minor loss. This is the beauty of strategy number 4, whereas it oftentimes will continue to generate signals, and if you had a small loss or a minor loss here and there, it will oftentimes recoup it rather quickly. So a couple of weeks later, another signal was generated just right before the end of the year on the 30th. Once again, a sell signal because we're below the 50. It met all the requirements. We closed in the bottom 25% of the range. So you could have taken this signal, and as we all know, the market fell out of bed the first month of the year. So many people were surprised. So many people thought, well, it's some news with China, or oh, it's these high frequency traders that control the market. We don't care about that. Who cares? Honestly, I mean, who cares? What does it matter if you're standing in the rain and someone is telling you it's raining? Okay, it's the same thing with the market. What does it matter if someone is explaining to you why they think the market is going down and you see it in front of you, it's going down? The point is just to trade off of it. Who cares what the reasons are? They're not going to make you a better trader. What's going to make you a better trader is if you can listen to the market, not to outside noise. Now, a lot of people say, well, Steve, I'm an intraday trader. I don't trade daily bars or weekly bars. Okay, here's a 5-minute chart of Apple. As you can see, this is the same strategy with the same rules. We're above the 50-period moving average, and you can see the beauty of it is that it can be applied to any time frame, all right? It works just as well whether you're trading 5-minute chart of Apple or a 10-minute chart of SNDK, okay? In this chart, where at 10 minutes, we're below the 50 period, so now we generated a sell signal. And look how well the strategy generated here, a nice valid setup to go short. Now, these strategies, they work best with stocks, okay? I can tell you they work fantastically with stocks. That's because that's the way I was introduced. I was taught these strategies with stocks. But the beauty is you can also apply them to ETFs, futures, forex, currency pairs, and commodities. So if you like to trade multiple markets, if you're not just a stock trader and you like to trade, let's say, E-mini futures, or you like to trade currency pairs, well, let me show you here. Here's a chart of the Australian dollar. Here's a daily chart of the Australian dollar coming into this month, all right? Where is price in relation to the 50-period moving average? It's above. So we're not going to short the Australian dollar. We're going to be buyers. Same exact rules. Price bar closes in the top quarter of its range. Same exact rule, okay? Software generates a buy setup, but are we going to go long at the market? No, we have to wait till we trade 1 or 2 pips above that high. And as you can see, the very next day it did. And in 2 weeks, you would have generated 400 pips or roughly $4,000 per contract. Same exact rules. We didn't change anything because we're trading currency pairs. Or how about a 5-minute chart of the E-mini? This was on the 24th last week. As you can see, initially, we were below the 50-period moving average. And while we're below, the strategy generated 2 sell signals on this 5-minute time frame. But midday, we crossed above it. So strategy 4 generated 3 buy setups, and they were all profitable. Okay, absolutely nothing changes because we traded a different market and a different time frame. A lot of people have been concerned about crude oil. Well, let's look at a weekly chart of crude oil. Okay, now coming into this, these are weekly bars. This goes back all the way to October of 2014. Now we only had about 4 or 5 closes below the 50-period moving average, but these were consecutive closes. So even with this small amount of data, we know that we're going short crude oil. And we all know what's happened to crude oil since then. This is a weekly chart. Did we have to look at news or look and find out what's going on globally or economically to find out what oil is going to be doing? Absolutely not. No one at specialist trading looks at those things. There's no reason to. Do we have to look at what's going on with OPEC or what's happening with countries? No. Why do that? Just look and see where price is in relation to the 50 to know what the overall trend is. Now, 2 extra bonuses included in our elite college for stock traders. First of all, we're going to devote an entire class to option trading. We know we have a lot of traders who say, well, Steve, these are great, but I don't actually buy stocks when I get a signal. I purchase options. Don't worry, we're going to teach you how to apply specific strategies for trading options when a signal is generated. On top of that, we're also going to teach you about the ATM method. This is a fantastic formula that was taught to me on the floor some 35 years ago that has really significantly helped my trading. Let me show you what I mean here, just to go into detail. ATM stands for Advanced Trade Management. I know most people, when they think of trade management, they think of stop placement, or they think of how many contracts or shares you should be trading with, or moving your stop to unchanged. This has nothing to do with that. In fact, I've never seen or heard anyone else talk about this. This program is so powerful that we only offer it in our college. We don't have a specific course for this. We don't have a side course. This is only allocated and taught in our colleges. Now, here's a perfect example of how this works. We all have these experiences where everything is working perfectly, right? This is actual. These are actual signals. I believe this is one of our strategies we teach in the course where everything works perfectly. Every time you get a sell signal, it works perfectly. Every time you get a buy signal, it works perfectly. We all love environments like this because you think that, well, gosh, nothing can go wrong. If we keep trading like this, I'm going to retire in the next 6 months. But then, as we all know, things change, and the exact same signal produced, or I should say the exact same strategy produced these signals. And this is an actual example here. What the ATM does through a simple formula that you calculate on a nightly basis, it will tell you whether to be trading the market with that particular strategy or not. So what the ATM would have done is keep you out of this environment entirely. So you would not have lost anything. That's the beauty of this. I don't know if a lot of people are using this. I use this on a daily basis. But we're not stopping there. We're also throwing in one of our most popular as well as powerful courses. This is an entirely individual course on its own. It's the PET D. You've heard me give many webinars about this, how we have so many people that have just turned horror stories into success stories by applying the PET D. The PET D stands for the Primo Early Trend Detector. Now, even though I was introduced to this formula, on the floor, what we did was, the reason why we call it the Primo Early Trend Detector is because Specialist Trading as well as Pro Trader Strategies devised it into a proprietary color bar algorithm. So when I had to use this, I had to actually just calculate the formula by hand. But what we've done now is make it a color bar algorithm. And so when you see a series of green bars, it's telling you that the trend is up. And when you see a series of red bars, well, the trend is down. It's that simple. There's nothing to calculate the way I had to on a nightly basis. So as you see, the beauty of the PET D is that it tells you which direction you should be trading. And once you know the direction, you can virtually apply any strategy or any technique. So it can be a couple of the strategies that I teach in the college, or it can be something that you're currently using, and I can almost promise you that it will increase your odds for success in terms of consistency. Now, one of the beauties of this is that it just doesn't work for intraday trading or daily bars. You can also apply this for long-term trading. Let me show you what I mean here. We know that a large amount of our members have some type of a long-term account or IRA or a portfolio where they keep their long-term investments. They like to know when to be in the markets when the market is rising, and when to be out of the market when we're in a nice bear market for the next 3 or 4 years. Well, the rule of thumb is that when you see 3 consecutive bars of the same color, well, that signals a trend change. Now remember, this mainly applies to long-term trading, but you can still see it in shorter-term trading. But oftentimes, the first time you see 3 or more red bars, you'll see a sustained downtrend. Just reverse that with 3 or more green bars. So how do we apply that to longer term trading. Well, here is a monthly chart of the S&P 500 index going back roughly about 20 years, okay? Actually about 21 years now. And we see all the peaks and valleys when the market went straight up, straight down, hit all these nice tops, and then was met by all these bear markets, as you can see. So as investors, you want to be in the market when it's going up, but you want to be out of these very strong downward moves. These are all bear markets that lasted anywhere from 3 to 4 years. Now the talk is, how do we know we're not going into one of these right now? These are the last couple of months of this past year and coming into 2016. As you can see, we went straight up to the dot-com crash, and then we fell out of bed. Then we regained, made another top until the banking crisis hit in 2007, 2008, and then we fell out of bed again for the next 3 years. And then we've been going up ever since. But a lot of people are talking about cycles, they're talking about presidential cycles, talking about what's going on in the Middle East, they're talking about interest rates ultimately changing, and they feel that we may be getting close to another top again. How can the PET-D help us? Well, you simply apply that color bar tool. And remember, when you see 3 consecutive bars of a different color, that tells you a trend change is in place. So coming back to 1995, all the way up, we had an abundance of green bars, a couple of red, but not enough to tell us a trend change, until right here, 3 red bars in 2001. Had you taken that, you would have bypassed all of the dot-com crash going in for the next 2 to 3 years. Now, once you have 3 green bars here, you're back in the market all the way up until 2007, and you would have missed the entire debacle here of the banking financial crisis, okay? Lastly, in 2009, we have had nothing but green bars. Sure, a splash of red every once in a while, but not enough to meet the requirement of 3 red bars. Now, coming into these last couple of months, we've had 2 red bars, but I specifically left off March. So would you like to know if March is red or if March is green? Okay, you'll be able to find that out once you become a member of the Stock College, because we will give you full access to the PET-D. You can apply it to any chart you have, and you will be able to plot a monthly chart of the S&P index and know if we are in a bear market, if we just started, or if we're still in a bull market. Another great advantage of using the PET-D, this is why it's one of our most popular tools, is that you can confirm any trade of any strategy with the PET-D. All right. In other words, let's say you trade a strategy that you feel very confident about. All right. Let's say it tells you to go long at the end of the day. If you want to confirm it and give your trade setup a higher level of consistency, if it's a buy signal, the PET-D must color that bar green. If it's a sell signal, the PET-D must color that bar red. If it does not meet and sync with these rules, most likely the trade will not work out or will not have a high level of consistency. So let's look here as we applied strategy 4, the strategy I shared with you today, some of the rules to the industrial average a while ago. As you can see, we have a total of 4 buy signals. Okay, remember, in order to confirm the trades, each buy signal needs to be colored green. And as you can see, each one was, and you had a nice rally here, anywhere from 300 to 500 points on the Dow. So they were all colored green except for this one. This was a buy signal. It met all the rules, closed in the top 25% above the 50-period moving average, met all the other requirements, but the PET-D colored it red. So the PET-D is simply translating what the market wants to do. And it's telling us that the market wants to go lower. And look what happened, okay? Remember, you can apply this to any strategy. You can use it as a market timing tool. You can use it long term. You can apply it to intraday trading. There's a number of uses for the PET-D, along with the strategies, along with money management and option trading. So this is the curriculum. Here are all the different weeks. Now remember, these are live classes, so you can join me in a live trading room. But remember, we're not just simply telling you about, well, here's what I think the market's going to do. We're giving you sound fundamental education that has stood the test of time. These are all things that I currently use in my own trading and things that were able to sustain me. Included in this is lifetime correspondence with myself, so that you'll always be able to ask me any questions regardless of what it applies to. I'm your personal mentor because this comes with being a member of our Stock College course. Now, after you have absorbed this information, there's still one more bonus that we offer you, that we give you because you're a member of the college. But we have to see that you've absorbed it, that you fully understand the rules of the course, you understand the strategies, you understand how to use the PET-D. Once we see that you've come a long way, then we supply you with email signals, okay? These are nightly signals that are basically meant just to share with you signals that have been generated so that you can check your work to see if you're in line or if you spotted the same signals. For example, this was emailed to our members on the 9th that are members of our signal course, okay? As you can see in Facebook, we have a strategy number 4, buy signal generated, okay? So let's see what happened, and let's look at that particular signal on the 9th of March. Obviously, we're above the 50-period moving average. We closed in the top 25%. Here's our setup bar. The software generated a buy signal. Now, let's say you had seen this signal, but you said, well, you know what? My last trade, I had a losing trade. I feel kind of, a little bit shy here, gun shy. How do I know this is not going to be a small loss as well? One of the best ways to do is to confirm it with a PET D. So remember, if we get a buy signal such as this, we need the PET D to color that bar green. So all you have to do is apply the PET D. And guess what? Even though the bars prior to that were red, it marks that day green. So this is giving you the confidence to take the trade. Now, had you gone long Facebook the very next day, well, it's roughly about 5 points in the upward direction in the next 5 days. Okay, this is how simple trading is. We teach you the strategies, we teach you the simple rules, we give you the PET D, we show you how to apply it to trading stocks or options if you like. We teach you advanced trading, money management, and then we give you different options in which to trade it. This is all included in the course. Now, we have a number of testimonials that people have taken with our first college, which was just a couple of years ago, that really turned their trading around. But I want to share with you this one testimonial that comes from one of the head traders of a hedge fund. And this is what he said in his testimonial. It says, Primo's mentoring has been a cornerstone of my career over the past 25 years. As I type this note, 26 of 40 positions in our portfolio are from a swing trading strategy of Primo's that I specialize in. Primo's greatest gift was separating me from my emotions and teaching me to listen to the market. So this is what we do. Remember, we try to get and cut out all that noise that you've been so used and taught to listening to and release it and listen to only one thing. And that's the market in front of you. Once you learn how to do that through my mentoring, you see how simple trading is. We don't use tons of indicators. We don't rely on news. We don't care what the fundamentals are telling us. We don't care about what the institutions are saying. We only learn to listen to the market, and that's it. And it's very, very simple, okay? Now remember, at the very beginning of this class today, I said that 80% of all traders will lose money. And if you want to simply translate that, it means 80% of all traders will fail. You'll lose all of your nest egg for trading, okay? I know many of you may be having trouble. You may be on their way there, or you may have actually lost all your money. If you really want to turn your trading around, I strongly urge you to become a member of this course. In fact, I can almost promise you that a year from today, you will have wished you became a member of this course. Because if you decide not to, you'll probably be looking back a year from today and say, boy, my trading is nowhere near where I wanted it to be a year ago. Why didn't I take that? All right, so let's recap. Here's what you're going to get in our Elite Stock College. You're going to get 6 weeks of detailed instruction. We're going to share with you 2 of my favorite strategies for trading the stock market. We're going to go over all the entries, exits, and stop placement. We're going to share with you educational signal alerts, okay? These are the email signals that we give you for educational purposes. You're going to get the add-on for the PET D, the Primo Early Trend Detector, so that you can put that onto your charts and it will automatically color your bars green or red. In addition to that, you'll get the add-on for the signal. So you get the educational signal alerts as well, telling you when a strategy has been generated, a strategy setup, okay? We have a class devoted to option trading. We also have another class devoted to the ATM method, okay, Advanced Trade Management. You have full access to all the strategy rules and full access to myself, all right? You have lifetime correspondence, okay? Tons of information here, jam-packed into 6 weeks of live detailed instruction with myself. And in fact, this is going to be starting in the next 2 weeks. So here's how to take advantage of this. Now, normally, I'm sure you've seen this, packages such as this can anywhere from $10,000 to $20,000. We are offering this at a discounted price, $44.95, and we're including payment plans. So if you can't come up with that one lump sum, you can have a payment plan devised with ProTrader Strategy so that you can start trading right away with a small deposit. This includes 1 year of trade signals, but this is for a limited time. So if you want to take advantage of that and have me as your personal mentor, someone with nearly 40 years experience personally mentoring you, here's how to take advantage of this great offer to become a member of my elite stock trading college. Pro Trader Strategies, once again, is my sister site. They market and promote all of my courses and colleges. You can email them at trading@protraderstrategies.com. You can call them directly at area code 310-598-6677. Or you can simply go to the link that is at the very bottom below there. Now that link is not live, so you have to just copy and paste that onto your browser, okay? If you'd like to set up a payment plan, I would strongly suggest contacting Pro Trader Strategies, because for just a very small deposit, you could be up and running and have instant access, okay? Now, once again, that link at the very bottom is not live, but if you look at your chat box in the far right-hand corner, they have posted a live link. So all you have to do is click that on, you'll get more information, and you can sign up right away. Now I'm going to leave this information up on the screen while I open up the question and answer box. I'd like to thank you for holding off on any questions, and I'll open it up right now, okay? First question, which I answered, is the webinar recorded? I missed the first part. Yes, it is. Simply request a link to this from Pro Trader Strategies. But remember, that discount in the college is for a limited time only, as well as the payment plan. So if you're really interested, contact them right away so they can put that together for you. And in other words, don't sit on this for another couple of weeks, because we're going to be starting the actual live courses in a couple of weeks. And so we don't want you to miss out on that as well, okay? Ken asks, the ATM, does it help you to choose which style to use in certain market conditions? Without giving too much away about that, yes, in a sense it does. It will tell you which style, as long as you apply the formula to the different types of styles you're interested in. It will tell you whether you can trade that or not. So yes, I guess you're right. And remember, we give you the basic format to all of these strategies, but that's just the standard basic format. Then we start giving you all these different, options and different variables of how to trade it, different entry points, different exit points, different stop placement points, different ways to stay in the trade if you want to get in and out quickly, or if you want to hold out and squeeze as much part of gains as possible. These are all different variables, and then you decide how you want to trade it. You may look it over and say, you know what, Steve, I only want to trade intraday with this. Great. We teach you and we mentor you along how to do that intraday. All right. And then you can apply the ATM, the PET D to all of these different facets of the strategy. Okay. Gene asks, how can you tell on a candle that it closed in the top 25 or the bottom 25? Okay, this is a very common question, Gene. All you have to do with a candle is it is no different from a standard open, high, low, close bar. In other words, the high of a standard bar is going to be the same as the high of a candle bar. But with candle, the high is not the open or close. The high is not the body. The high is the wick. So in other words, all you have to do is measure the top of the wick to the bottom of the wick. Let's say that's 4 points, okay? You just divide by 4 separate but equal parts, so each one of those divisions is going to be 1 point. And so the very top 25% will be the top point or the top quarter of the candlestick bar. Just divide by 4. If you close anywhere in that top 25%, that's where you want to find a significant setup bar, okay? It's really that simple. We go over all this in the course. It's very easy. It's not difficult at all, and you'll be able to find it very quickly. Norman is asking, does your system work? First of all, Norman, this is not a system. These are strategies. Remember, systems say that you have to trade everything the same way. But he's basically asking us if all of these techniques or edges work on Thinkorswim. Yes, they do work on Thinkorswim. You just have to alter things a little bit. Let me just first tell you the platforms it does work with, okay? In other words, when you add the add-on and you get automatic buy and sell signals generated, or you get the PET D, it works on TradeStation, NinjaTrader, Metastock, MT4, Sierra Charts, FCXM, and it does work and apply with Thinkorswim, but because of the way they're formatted, what we do is we give you a free Ninja platform, okay? And then we just split the data from Thinkorswim and apply it to NinjaTrader. So you can still look at Thinkorswim, but you'll also have a free Ninja platform. And then on Ninja, that's where you'll see the signals generated, because Thinkorswim does not allow us to project the PET D or the buy and sell arrows there. So all we do is just split the data and we use that and apply it to NinjaTrader. Now, the best news is that we do this all for free. There's no extra cost. We even supply you with the NinjaTrader platform. And our tech support division, which is really has got tremendous reviews and testimonials about how simple it is, they set it all up for you. So you just schedule a time, they contact you, and they put it all together for you and show you how to do it. So it's very simple. It's not complicated at all, okay? Shazad is asking, will you be sending the recording? It would be good to look at it in its entirety. I joined in late. Thank you. Yes, we will be. Remember, once again, if you don't get it, simply contact Pro Trader Strategies and they will be sending it to you. You know, as we close up here, I see one more question here. How about a Macintosh computer? You know, Dan, that's probably a better asked question for Pro Trader Strategies since they handle that, but I don't think there will be any problem. You know, I would simply send them an email or call them up, but I think they should have access, but, you know, I believe somebody may be answering that question for you right now, as I know sometimes they answer it during the presentation. But contact Pro Trader Strategies, okay? One thing I want to say is I know we're already we're starting the 4th month now, April of 2016. Now ask yourself, we all do this. I know I did this when I was first starting trading. I wanted, you know, at the beginning of every year, I wanted to set goals for myself of where I wanted to be halfway through the year, by the end of the year, even by each quarter, okay? And I can tell you, my first 2 or 3 years trading, I never met those goals. Never did. Because I was, you know, just basically trading and relying on the same thing that most traders do, which is conventional wisdom, which really doesn't work. I was relying on news. I was relying on tons of indicators. Even though we didn't have chat rooms or trading rooms then, some 40 years ago, what we did have were newsletters and subscriptions, and I subscribed to each and every one of them. I waited with bated breath for every news announcement, and I still couldn't make a dime, okay? So every year, I started out with all these hopes and dreams, and then by the middle of the year, I realized I would never make them, okay? I strongly feel, because of the testimonials we've had, because I've been doing this for 7 or 8 years, we have so many people that have been able to turn their trading around. I really feel confident I'll be able to make you a consistent trader. But you must become a member of this course. Remember, this is not something where we just simply throw a DVD at you and say, good luck, and have fun, you know, and best of luck trading with this. Or this is a system, just do the same thing each and every time. We don't believe in that. We want to supply you with the information and then mentor you along the way. That's what you're getting. You're not only getting strategies and techniques and methods that have stood the test of time, you're getting someone who has been trading these for nearly 40 years. I'm going to be your personal mentor. I'll be there with you every step of the way. So remember, a year from now, you'll most likely be kicking yourself for not taking this course. And if we offer it a year from now, most likely it'll be about 50% higher in cost. So do yourself a favor, come on board. You're going to be a student of mine for life, and you'll really use these techniques that have been able to sustain my own trading for nearly 40 years, okay? I want to thank you all so much for attending today. I look forward to all of you becoming students of mine in the Elite Stock Trading College, and I wish you the best of luck trading. Thank you so much. I'll see you next time. Bye-bye.